headlines that we're tracking for you this evening. You're watching CNBC TV 18 and this is Reporter's Diary. Now straight to all the action on the last trade then. It was a strong day for the bulls as the key indices traded in the green, closing the session with decent gains. The Nifty stood out as the outperformer with a sharp rally of 128 points to close above 11,000. The Sensex also saw strong buying to close the trade with gains of about 358 points, and bank stocks also gained ahead of the RBI monetary policy tomorrow. Now the mid-cap index recovered by 200 points and closed with minor gains. Surbhi Upadhyay joins us now with all the trading action. Surbhi.
Well, it's been long and painful. It's taken us over 4 months to come back to this level of 11,000 on the index. It's been a slow grind. We've seen several casualties, lots of stocks losing a huge amount of value as well, and a lot of mid-cap accidents as well. And that's the 4 months journey. Let me talk about today. Today was a good day. There's no taking away from that because there was widespread participation. So on the index, today you won't find us talking constantly about the same 4 or 5 stocks that are taking the index higher. Today there was lots of participation coming in from various sectors, various stocks. There's some hope obviously building in of a rate cut from the new governor. Let's see if that comes through or not. But the other facet of trade was that the mid-cap underperformance also diminished today, at least to an extent. There was a good recovery on the mid-cap index and we had some high flyers there as well. So let me quickly boil it down to stocks. If you're talking about the Nifty, then Tech Mahindra really stands out, rank outperformer, great numbers for the third quarter and an 8% up move today. Z, in fact, some of the other SL Group stocks as well were quite active, and there was some buying. That was witnessed here. Cipla reacted well to those numbers that came through. Other Nifty gainers included a couple of metal names. Tata Steel, for instance, was very, very active. Hindalco did well. Bajaj Finance, the leader, is really moving higher and approaching those levels of 3,000 once again after what's been a blowout quarter for this company as well. Auto names have been in recovery mode over the last couple of sessions, and that trend continued today. So Eicher, names like Maruti, Bajaj Auto, they were all on the higher side. Banks were slightly mixed. You had some gainers like the ICICI and the SBI duo, but then you had some weakness on names like Axis, IndusInd and Kotak Mahindra Bank as well. Speaking of losers, let me just quickly round this up. Titan is seeing some profit taking after its massive rally in the last couple of weeks. Adani Ports and Dr. Reddy's were the other two main stocks in negative territory. Now let me come to mid-caps. Action is very earnings driven, very earnings specific, but as I said, at least there was no major casualty today. SRF, Dish TV, these were some of the stocks on the upside. The ADAG group was split down the middle. So you had Reliance Nippon rallying 16 to 17%. Adani Power also moving higher post the numbers. But on the losing side, look at Reliance Infra. That's a result disappointment. Of course, concerns about over leverage, etc. 30% down on that stock. Tata Chemicals and IDBI Bank were the other key mid-cap losers of the day. Coming back to the central point, 11,000 is here, but sustainability is the key. We'll have to see how the market reacts, particularly if there is no hike, and whether it can digest that and still keep on building this momentum.
All right, Surbhi, thank you very much for joining in with that. Now, the Reserve Bank of India will be announcing the 6th bi-monthly monetary policy statement come tomorrow. Now, the MPC meeting entered its second day today, and this will be Governor Shaktikanta Das's first policy announcement after he took charge as the new governor in December. Now, in the last 3 policies, the RBI has maintained a status quo on the repo rates, but this time around, given the fiscal situation where, the budget did announce some sort of impetus to demand, there is expectation that that may push inflationary boom in the economy, so to speak, and therefore a tightening is something that one would logically expect. But given the fact that inflation print has been very low for the last few months in the running, 90% of our respondents actually expect a status quo on the repo rates in tomorrow's policy. 10% actually did expect a 25 basis point rate cut, but it is unlikely that that will be given in the light of the fiscal challenges and the recently rising crude oil prices. But one thing is for certain, 100% of our respondents said they expect a change in stance from calibrated tightening to neutral, largely on the back of the lower inflation print. As far as the entire calendar year is concerned, 50% of our respondents said they expect a 25 basis point rate cut, and the other half expect a 50 basis point rate cut in the entire calendar year up to December. No action whatsoever is expected as far as the cash reserve ratio is concerned. That is expected to be left unchanged at 4% in this policy. On the macro parameters, for the FY19 GDP forecast, of 7.4%. Our respondents largely expect that to be left unchanged at that current level. But for the first half of the next financial year, 50% are expecting that 7.5 figure to be lowered, largely because the full year growth expectation is around that 7.5% level, and the first half typically sees a lower growth, which is why respondents are expecting a lower print in first half. As far as the inflation figures are concerned, now you've already seen RBI revise the inflation target 6 times in the last 1 year, but this time around the expectation largely is that the first half of FY20 forecast could be left unchanged, and similar for the second half of this financial year as well. And lastly, the tone of the policy itself, which is as keenly watched as the policy action, many are expecting, in the light of what we've seen in the inflation reading so far, especially with inflation coming in at 2.2% levels in the last reading, it is likely that the RBI will sound a little more dovish, but we'll have to wait and watch out for what actually the MPC announces in the policy, which is now expected at 11:45 a.m. tomorrow. Now we'll shift our focus to some earnings coming in then. Vodafone Idea reported a whopping 5,000 crore rupee loss in its second quarterly results since the merger of Vodafone's Indian operations with Idea in last August. Now the company's revenue was a minor miss, but EBITDA and margins beat street estimates. Kritika Saxena joins us with the key highlights. Kritika.
Well, the revenue was more or less in line with what we were expecting at 11,764.8 crore rupees. It's down by about 2.2%, so slightly more of a decline than what we were expecting. But the net loss is something that the street may be perturbed by. Even at a very realistic estimate, the poll had said about 4,700 crore rupees of a loss. Now, the loss, including tax, has come in at 5,004.6 crore rupees. And again, that is largely because of a one-off tax increase that has been seen in this quarter. I'm just trying to tabulate the exact amount of tax that they have paid, but net as a result of that, they have seen that impact on the bottom line. But if you look at some of the other figures, there is a marginal improvement. And of course, keep in mind that this is the first full quarter that the earnings have come in. September earnings were adjusted, so this is the first time that we have actual comparative figures. EBITDA has increased by about 11.4%, but this is because a majority of the merger synergies had gone through earlier. So the amount of expenses this particular quarter around have been lesser. So given the fact that the loss has come in higher is a little bit of a negative, considering that the merger expenses have already been affected in the earlier quarter. Margins 9.7% higher than what we were expecting. So whenever there is any kind of issue with respect to loss, you look at the margins. Margins coming at 9.7% is a positive. Now, KPIs seem heartening. In some areas, there's a disappointment. So ARPU has gone up by 1.5%, but the MOU has gone down by 2.5%, which is basically the minutes of usage. Minutes of usage, the company says, is attributable to the introduction of service validity vouchers in this quarter, which led to that decrease. So they seem to be indicating that this could be a one-off. Data volume has gone up by 11.5%. 4G subscriber base now stands at 75.3 million. So in this quarter, they have actually increased their 4G subscribers to 9.5 million, which is quite significant. Very quickly, the company has reiterated that they will be monetizing their intra and intercity fiber. They have also said that they have the option of selling 11.5% stake in Indus Tower, which is valued at 4,900 crore rupees. So the debt that has gone down in this particular quarter, company seems to be hinting that next coming quarters they are at least looking at bringing that down, right now at 1.24 lakh crore rupees.
All right, Kritika, thank you very much for joining in. We'll leave it at that now. A parliamentary panel has summoned officials of Twitter India and the Ministry of Electronics and IT on the 11th of February. Now, the panel wants to discuss with them the issue of safeguarding citizens' rights on social media platforms. This development also follows complaints by several BJP and right-wing social media users that Twitter has shown a bias against right-wing accounts. Parikshit Luthra joins us now with more on this. Parikshit, the testimony is on the 11th of February. What is the issue here?
Well, the entire theme of the meeting is safeguarding citizens' rights on social media. We know very recently there was a protest outside Twitter's office in India, where certain groups had accused Twitter of being biased towards certain right-wing accounts. So we'll have to wait and see whether that figures in the conversation on next Tuesday, when Twitter India and their representatives appear before the Parliamentary Committee at 3 p.m. So you'll have members of Parliament. This committee is headed by Anurag Thakur, who is a member of Parliament of the BJP. It has members from across party lines. There will be also officials from the Ministry of Electronics and Information Technology who would ask them about steps being taken to prevent misuse of social media. There will probably also be talk about elections and what Twitter is doing in order to make sure that this is not misused by any political forum for political gains in that sense. So let's wait and see. This will be an interesting meeting. Over the last couple of months, there have been a lot of meetings with the social media platforms and the Election Commission. The Ministry of Electronics and IT has also met representatives of Twitter, Facebook, and WhatsApp. So this will be an interesting meeting, and we will be keeping an eye out for what will happen. But the entire theme is safeguarding citizens' rights on social media.
All right, Pariksha, thank you very much for joining in. So 11th of Feb is the day to watch out for. But now here's the big political headline that we've been tracking for you this hour. Robert Vadra is currently recording his statements at the Enforcement Directorate office in connection with a money laundering case which relates to alleged possession of illegal foreign assets. Now, what's interesting to note is that Priyanka Gandhi, the General Secretary of Congress, and his wife dropped him off to the ED office for this today. Pallavi Ghosh joins us with the very latest. Pallavi, tell us what is the latest you've got?
Well, I mean, the interrogation of Robert Vadra is still going on. Yes, Priyanka Gandhi Vadra actually dropped him off at the ED office and she went across to 10 Janpat, and from there she was over here at the Congress headquarters a short while back. A very clear-cut political message which was sent out by her. In fact, when we asked her this question, she said, of course, it's a case of political witch hunt, but I stand by my husband and I'm not going to be cowed down. I think that's the larger political message which she wants to send out, that come what may, there's nothing to worry about, there's nothing to be scared of, and she's certainly going to go back to the party workers, to the booth workers over there in Uttar Pradesh and otherwise to make the fact that every time someone raises a voice against Modi, this is exactly what happens to them.
All right, Pallavi, thank you very much for joining in with that. Now, even as global smartphone companies bet big on India, a survey by Pew Research Center highlights that only 24% adults in India own a smartphone. Now, this is worse than Nigeria, Tunisia, and even Kenya. Further, India ranks the lowest in the smartphone penetration market among the 27 nations that were surveyed. This includes 9 emerging economies as well. Kevin Lee joins us with the findings. Kevin, take it away.
Well, that's right. In a survey done by the Pew Research Center in 27 advanced and emerging economies on smartphone penetration, India has the dubious distinction of having the lowest percentage of smartphone-owning adults at 24%. That's against an average of 76% in advanced economies and 45% in emerging ones. India also has the highest gap between the percentage of men who own smartphones as compared to women, and ranks lower in smartphone penetration than Kenya, Tunisia and Nigeria. Beyond this, 34% adult men own smartphones compared to 15% of adult women. That's a percentage point gap of 19 percentage points as compared to 9 percentage points 5 years ago, which suggests that even as smartphone ownership explodes in semi-urban and rural parts of India, this growth isn't that equitable. Interestingly, more Indians own feature phones than smartphones, and the smartphone-owning population of the country is in fact lesser than the population who doesn't own a mobile phone at all. 40% of Indians own feature phones and 35% don't own any mobile phone. Also, only 8% of Indian adults over the age of 50 years own a smartphone today. So there's something to put the digital India dream into perspective. Back to you.
Oh yes, 35% of the Indians don't even own a mobile phone. That is some grim data there. Kevin, thank you very much for presenting that to us. Now moving on, online grocery delivery service Grofers is eyeing an IPO by 2021, according to its founder, Saurabh Kumar, who, speaking to CNBC TV 18's Priya Sheth, said that the firm is also looking to achieve company-wide profitability in the same time frame.
We are already profitable at the operation level in most of the cities that we operate in, and we are looking to be company-wide profitable in 2021.
So once you get profitability, is that when you'll go and hit the IPO market?
Probably that's the idea.
So by 2021, you'd look at
Yes.
an IPO?
Yes. We are constantly fundraising. This is a business that requires funds to build, so we are constantly fundraising.
Now, the NCR property market has been in a slump for years, with home buyers' money stuck in incomplete projects and prices plummeting by 6% since their 2015 levels. But a recent launch in Gurugram by Shapurji Pallonji's Joyville brand has sold 400 units in under a month. cnbc TV 18 caught up with the company's MD Sriram Mahadevan. Listen in to what he had to say.
Because Gurgaon has seen a lot of default in terms of delivery of homes by many developers in the past. So that's why the sentiment was a bit weak. But that sentiment is now coming back. That is getting, as I see it, it is getting positive with the infrastructure story of Dwarka Expressway also coming in, with good brands also launching their products, and with Shapurji coming in, and we have been constructing homes for so many other developers. So when we are constructing for ourselves, I would assume that customers know that we will do a good job about it.
All right, with that, we'll wrap up this edition of Reporter's Diary. Many thanks for watching, but do stay tuned. The Real Deal will take all the action forward.